we're still in negative 40 on the predicted true strength indicator, and I'm sure that everybody's been watching how I've been using that true strength indicator, how I was able to call the market direction based on that patented indicator from Vantage Point. I'm not sure patent is the right word. I don't know if they have a patent on that or not, but it's an indicator that's only on this program, and that's one of the reasons I use the Vantage Point software in my trading and to advise my clients, because I cannot get that indicator anywhere else. So it's very important. This indicator is a critical indicator to me, and when this crossover takes place to the upside, that tells me that the market's likely to continue in that direction for some time. Predicted MACD also supportive, moving higher. Predicted medium and long-term differences. Now, the predicted medium and long-term differences, the medium is turned positive, but the long-term is just now crossing over the zero line. So let's go back into that daily report for a moment here and have a look at this. We can see that we've got 118 on the short term, which is somewhat overbought, to be perfectly honest, and we've got medium, and the medium term is 95, which is pretty good, and now we have the long-term difference at positive 0.9. That's a good indicator that all three, and the neural index is up, so all of these short-term, medium, and long-term indicators are starting to all agree with each other. So when you have the neural index and the neural networks all looking at the different markets and everything, they're suggesting that Euro-US is on the verge of potentially a trend reversal. That will count on a number of things we're going to have to look at. Number one, global equities. Number two, the commodities. Are the commodities going to continue to move higher? All of these things we have to keep an eye on. So, you know, looking at our trades right now, before I go in and start taking some questions, we can see that our U.S. Canadian trade that we've entered into at 103.14, up $162, which is a very nice trade. We've only been in this trade, guys, for just over an hour. So, you know, $159 profit on a $53,000 account on an unleveraged basis in 1 hour. Very, very nice, very nice. And the S&P 500, same thing. We've entered into this trade at exactly the price I recommended, 105.60. We've got 50 points on that for $250. So essentially, you know, my trading day in some regard is done, and it was that easy that I just, you know, not that trading is ever easy, because it's not. Trading is very difficult, but you have to have a good system, something. In my case, I'm using the Vantage Point software as my tool. I use it as a standalone indicator to do this analysis. So, you know, we've had a very successful day. We started the webinar with a $7,000 profit on the account. We now have $8,000 profit on the account. We've moved up to $54,000. So all of these trades in the positive. We've got the crude oil contracts we're buying, Great Britain U.S. longs, S&P 500 long positions, and the U.S. Canadian shorts. U.S. Canadian is now starting to move somewhat aggressively, and the reason I can tell that that's going to happen is I've done my pre-market analysis using the Vantage Point software. Now when the bell goes off, I'm watching my equities, I'm watching my commodities. The Canadian dollar, very high correlation to these crude contracts. So if that crude contract is moving up and the equities are moving up, I can pretty much guarantee you to about a 90-some-odd% that the U.S. Canadian pair is going to be moving lower, you know, keeping things very simple. So with that said, what we're going to do here now is we're going to go in and we're going to take some questions. I hope everybody you know, has some questions for me here this morning. Now, again, we're going to be looking at a number of different indicators going forward. We're going to have more and more webinars that are going to become more and more detailed. I thought I would enter into that equity trade this morning because in the last webinar, a gentleman asked if I could start doing some equity trades, and I'm certainly glad to do that. I do a considerable amount of equity trading, both in the ETF market and the individual stocks. And, you know, to some degree, we're all equity trade. If we're trading Forex these days, to be perfectly honest, guys, to reinforce the intermarket technical analysis, the Forex market is following the equities and the commodities. These markets are all interconnected. And that is a fact. And going forward in the future, this is something we all have to remember. And I don't know of any other product out there that I can use that actually takes all of these things into consideration when doing its forecasting. And in my business, I need to be right more than I'm wrong, or essentially I'm not in business. So I need to know what the market's going to do ahead of time. So we're just sitting here waiting here, and I'm going to take some questions here on the Forex trading. Patrick has a question. If U.S. Canada hits its predicted low tonight, would you exit and wait for an opportunity to re-enter? Excellent question, Patrick. That's exactly what I've been doing all week. The recommended entry was in the 103.60 area. That was triggered Sunday night. It went down to the predicted low in the 102.25 area. I cashed out. I re-entered. I have actually been in the U.S. Canada trade so far this week 3 times. Now, what I'm watching is that 103.60 area is no longer the area of resistance. The resistance area on a daily basis has moved lower to the 103 area, and that's why I entered in. So to answer that question, the only way you make money is by taking profits. So I can work these orders on a daily basis, and what I'll often do is I'll enter into one position. If I think I'm getting into a trending move, I'll leave one position behind, and I'll intraday and day trade 2 or 3 others. Patrick, again, the risk is there might not be any pullback tomorrow. The risk is there might not be any pullback tomorrow. That's true, you know, but to be perfectly honest, there's a pullback every day. Nothing goes straight up and nothing goes straight down, and that's a reality. So to some extent, there is going to be a pullback. If U.S. Canada goes down to 102 or even 101.50, it is going to retrace a certain amount, and the Vantage Point software will pick up on the next entry point for the next day. And they do that on, you know, probably 85-90% of the time, unless we have a very dramatic move like a non-farm payroll like we had the other week where U.S. Canada moved 300 pips in one day. That's, you know, can't account for that. Got another question here. Greg, can you give your thoughts on copper? I most certainly can. Copper is a very useful metal. In my opinion, it is going to go up. That's my prediction. Gold is a very nice shiny metal to look at, but to be perfectly honest, I'm confused as to what its value is. But copper has a lot of value in everything we do on our day-to-day life. So my advice is it's going to go higher. You talked, Patrick, again, you talked about not being over-leveraged. However, you have many positions open. True. At which I'm not over-leveraged. Over-leveraged is when you have $10,000 in your account and you enter into a $100,000 position. That puts your leverage at 10 to 1 on a single position. On an individual position, I am leveraged at 1 to 1. So I usually will let that run over multiple positions up to probably 4, 5, 6 to 1, and on some days it's inverse. But what you have to understand is that leverage is based on an individual position, and a lot of people don't really understand this, that they think that they have $10,000 in their account. This is, and actually there's a lot of training programs that are out there that say, you know, you have $10,000 in your account, you can do 4 or 5 positions of $100,000. Well, that would actually leverage you out at about 80 or 90 to 1, and that's not good. You know, so essentially on a trade by trade basis, the most I will push any given trade on leverage is 1 to 1. And there's certain times where I'll leverage up a little bit higher than that, but then I'll have a tight stop, because basically it's going to come down to money management.